afternoon, everyone, and thank you for joining us today for this panel, the panel on defying the odds. Will DeFi reshape financial sector as we know it? I would like to add, will it reshape the economy or the society as we know it? Because we can go even more global in that sense, and I think we can discuss that as well. My name is Merav Ozair, and I will be the moderator of this panel, and we have an esteemed panel today. I'm a fintech faculty member at Rogers Business School. I'm a professor of finance, tech finance, and my specialty is in everything to do with blockchain tokenizations, digital assets, crypto asset, NFTs, and everything in that space. But I would like to start with the introduction of our, as I said, wonderful panelists that we have here today, and I would like to ask each of them to introduce themselves and tell us a little bit about your background and what got your interest, especially in digital assets and this space. And I'll start with Michael.
Okay, thanks, Merav. Thanks for the folks having me today. My name is Michael Shaulov. I'm the CEO and co-founder of Fireblocks. Spent 2 decades actually in cybersecurity before jumping into fintech. Had a few companies in that space. And basically, the way that actually brought us into this space is that was working for one of the biggest cybersecurity vendors. We were doing investigation where multiple cryptocurrency exchanges were breached, and that's what sort of helped me to realize the gaps and the opportunities that are in the space. So out of that, Fireblocks was born. What we do in Fireblocks, we provide a market infrastructure for financial institutions that are working with blockchain and digital assets, specifically with cryptocurrencies, and we provide them custody technology and the Fireblocks network that connects the different market participants for settlements. And last but not least is basically all of our DeFi access that we started working on over a year ago. So most of the hedge funds, most of the financial institutions that are currently doing the institutional DeFi, I think today using Fireblocks, so we have a lot of insights in terms of what's going on in this space.
I think that the next good person to talk to will be Dominic, because you are with the institutional investors type of thing. So how can you tell us a little bit about your background? And of course, you are muted.
Sorry. Hi, this is Dominic Ward. I'm a managing director at Iconic Holding. Iconic does a few things in the crypto space. We started with a startup accelerator that we launched about 4 years ago, targeting early stage crypto companies. We've since expanded such that we have an index fund, which is a crypto top 20 index fund for European investors. And we now also have a Bitcoin exchange traded note that trades on the Frankfurt Exchange in Germany, also for European investors. So we touch different parts of the crypto space. And, I think in some ways, this conversation touches on a lot of kind of how we started, which is dealing with emerging technology.
Okay, so Peter, would you like to introduce yourself? Tell us a bit about what got you here.
Yeah, hi. So Peter Johnson, I lead fintech and venture investing for Jump Capital, and I've been doing that for the last 8.5 years or so. Prior to Jump, I was a consultant and an investment banker working with banks and brokerages mainly, and then joined Jump just as Jump Capital was starting a little over 8 or so years ago. And shortly after that is when I got into crypto. My interest had heard about crypto previously, but interest was really peaked during the events in Cyprus. If folks remember, in 2013, Cyprus was seizing the deposits of folks in that country, and the price of Bitcoin spiked. And that got me looking into, hey, is this something that's really kind of real, and are people really fleeing to this magic internet money? So I went down the rabbit hole, determined that Bitcoin, crypto broadly, which was just Bitcoin at the time, really was a transformational, financial innovation, and I thought was going to be the largest kind of innovation that I'd probably seen in my life. So from that time, have been focusing a lot of my time on crypto. Now it is the vast majority of my time that I focus on crypto, doing crypto investments for Jump. And Jump Capital, we're a Chicago-based venture capital firm that's thesis-driven. We're operationally focused, and we're funded exclusively by the owners and employees of Jump Trading. We're currently investing out of our sixth fund. It's a $200 million fund. We've invested in a ton of great companies in the crypto space, companies like BlockFi, Voyager, TradingView, BitGo, Curve, Bitso, 0x, et cetera. And I work closely with my colleagues on the trading side of the firm, Jump Trading. And if folks aren't familiar with Jump Trading, they're a 1,000-person quantitative trading firm, one of the leading proprietary trading firms in the world, and also one of the largest crypto traders in the world. So by working with them, I'm able to do three things that Jump does in the crypto space. One is on-exchange trading, which Jump is a very big participant in. We also do direct partnerships where we're a liquidity provider or market maker with various projects and companies. We also get involved with running nodes, publishing governance protocols, really a whole bunch of things. And then lastly is venture capital investing, which, as I mentioned, that's the area that I lead at Jump.
Thank you so much. And last but not least, Steve.
Yeah, thanks for having me today. I am the CEO of Algorand, and I was sort of introduced to crypto, I guess, later than some of you guys, but around 2016. And, my sort of personal background is I started one of the first internet infrastructure companies in the mid-90s, and, felt that some of the dynamism in the crypto space was really sort of the first thing I had seen in the intervening 20 years that had kind of a similar feeling. And I think in a lot of ways what we're creating here is the internet of money. And was fortunate to be introduced to Silvio Micali, who is, really, I think, one of the founders of modern cryptography and a Turing Prize winning professor from MIT. And, I think what he's felt was that, Bitcoin and Ethereum were really inventive, innovative uses of both distributed computer science and cryptography, but that, there needed to be sort of more efficient, scalable, decentralized platforms as the market continued to grow. And so, Algorand is both a protocol and a public blockchain network, but I think, more substantively is a platform where people can issue, tokens and financial products of all sorts. And, we've got over 500 assets that people have issued today, around 11 million users on the platform, and have seen, a wide variety of cases from ETFs and digital securities to utility tokens and non-fungible tokens. And, kind of highlight there is, especially in the music space, we've seen over 4.5 million non-fungible tokens created on the platform. Really excited about a lot of the inventive use cases we're finding out there, and, excited to talk about it today.
Excellent. So as you can see, we and superb out there with a lot of friends in the tech world and finance world, etc. But before we jump into the discussion about DeFi and all the questions that relate to that, I think it's worthwhile to spend a minute or two to at least explain what DeFi is, because there's a lot of misconception that is happening out there about what DeFi is or is not. There's a lot of bad press as well. And I think I would like to mention a little bit about what DeFi is. So in the most, I think, basic, simplistic way to think about DeFi is to think about that you can take any financial product or service, and not even just finance. I mean, we can talk more and discuss more about that, how we can do it, in fact, with anything, and codify it into their components, rules and procedures, because everything is rule-based, and convert them into a self-executed code. I mean, you probably heard this code is called smart contract, but let's not get into the technicalities. The main goal, I think, the ultimate goal of DeFi is to create a self-sovereign system that allows its users to engage in a broad range of all kinds of financial and economic activities, any economic activities, without any intermediaries. Yeah, but we can get into the intermediaries issue later. But if you think about it, Bitcoin can be considered as the first DeFi, because it is a decentralized payment system. That's the way I would like to think about it. And then from there, it evolved to when Ethereum, which is the first platform that started using smart contracts to create all kinds of other applications, and this is how we got today this boom of DeFi applications, and you see things from lending to trading, whether trading is a decentralized exchange like Bancor, or we're talking about liquidity pools like the Uniswap and the SusSwap and all the swaps, and we're thinking about payments other than Bitcoin. There are all kinds of other payment systems that you can create, and not to mention asset management and other things that I think that our panelists can elaborate more about that. But I would like you now to think about, how we can envision DeFi in the really future. And that's, I always like to think about the next, 10 years or 5, 10, even 15 years from that. And think about, a situation where you are, this is why I'm saying it can touch every part of your life, is that think about a situation when you are exercising in your gym equipment, let's say Peloton or Max, whatever you have. And then this gym equipment is rewarding you, like, mile rewards or store rewards for your exercise with tokens. Let's say you just, got your extra mile and getting some rewards, and programmatically, immediately, these tokens that you just received from your hard work exercise is sent to pay your student loans, or maybe to buy a coffee at Starbucks nearby, which you're gonna pick after you finish your exercise. Imagine this. This is possible. We all have to imagine, and then technology follows. Because even if you think about it, in the 80s, what we're doing right now was considered sci-fi. But look at us today, doing it as if this is second nature. So the imagination can take you everywhere. I mean, that's the way I see it. This is why I'm so excited about it. But I would like now to turn to the panelists and ask them how they see DeFi. What do they think about DeFi is or is not? What use cases did they like? What excites them? And start from there. Let's start from back to and I'll start with Steve.
Yeah, sure. Well, I think, what DeFi really represents in a lot of ways is, I think from our perspective, a new class of financial applications that is sort of crypto and blockchain native and allows sort of anyone to participate in, kind of different systems. And so whether it's, swapping for assets or decentralized exchanges, borrow, lend, I think what's interesting is that, it's facilitating, kind of a speed and flow of capital that would really just be impossible in the traditional financial world. So I think in a lot of ways it has the potential to replace banking in a traditional sense. It's generating yield for people, but I think more than anything else, it's sort of, I think the way that I would suggest people think about it is as the building blocks for a whole new wave of financial applications that we're starting to see built. So I think as with all like technology. New technologies, there ends up being sort of a stack. And so you have, layer one platforms like Algorand that effectively are delivering, bandwidth and functionality. And now we're seeing this sort of DeFi layer emerge on top, which is really, kind of financial functionality that people can use to build all sorts of interesting tools.
If I may, I mean, I don't know if the audience is familiar with Algorand. But I think that, when people think about DeFi, they think about Ethereum, right? Because most of the applications were built on that. And I think that Algorand, I always like to say, it's another type of Ethereum, a different way. And maybe you can explain that to people, that, don't think that Ethereum, that's the only place where you can build applications.
Sure. Well, so Algorand is a smart contract platform, so it is similar to Ethereum in that way. I guess there's a couple of significant differences. One, our Algorand doesn't require anything other than trivial sort of computation and power requirements. In fact, the chain is carbon negative, and we actually use a DeFi application on chain to automatically buy carbon offsets to the small amount of carbon that is consumed by the nodes running online. Beyond that, I think one of the things that we've focused on is thinking about, what common, use cases people need. So if you look at asset issuance as an example, creating a token, whether it's fungible or non-fungible, those should always all be able to be done in layer one. And so in Algorand, we have a series of what we call primitives, but built into the protocol are ways to, create and issue assets, exchange, those assets one-on-one or with multiple people, and then construct smart contracts around them. All those things are very fast. So whether smart contracts or simple transactions in Algorand, it takes only a few seconds to complete. And we've got, throughput that's sort of similar scale to something like Visa's transactional volume during the day. And so, it's and also it costs about 1/10 of a cent per transaction today. So it's inexpensive as well. And I think that's something we believe very strongly about, that, you can't have networks that are congested or it creates a bad user experience as they grow. And so, certainly I think we're one of a variety, one of a handful of layer one protocols that have emerged as sort of new approaches to how you create, whether it's DeFi or other decentralized applications, and have sort of a new take on the technology relative to some of the earlier platforms like Ethereum.
So thank you for saying that, because this is a really good point, because many times, whether people in the industry or reporters or even students ask me, they always say, DeFi or NFTs are going to destroy the environment. So it's a good point that you just mentioned that it's not completely true. I'm glad you mentioned that. So I'll turn to Peter. Maybe Peter can chime in here on this discussion. You can comment to Steve, or say.
Yeah. I think what the point that Steve made on DeFi being kind of open, I think that is really the key thing to think about when you're thinking about DeFi. I think a better name for it is really open finance, in that it's open networks that are open for anyone to join and utilize. And I think that there's two big implications that are going to come out of that. One is that anybody can utilize DeFi applications. So I think that this is going to bring financial services to people all over the world in a whole new way in the future. So that's one. And two is that anyone can build on top of different DeFi applications. So when people talk about DeFi being composable, that's what they mean, is that you can build these building blocks on top of each other, kind of like, kind of Legos that you're putting together. So it makes it easy to put together. You might have a trading protocol and a lending protocol. You can build a leverage trading protocol is always the kind of very easy example to think about this. Where I think this will go in the future is that we're going to build this financial infrastructure that you can do all of these financial transactions, whether that's trading or borrowing or saving or insurance, et cetera. And that eventually this is going to replace a lot of the existing financial infrastructure that traditional financial institutions run on. Like old COBOL-based systems eventually will be moved off of, and oftentimes be moved on to DeFi protocols. And I think that this, in years from now, is going to be the underlying financial plumbing that is not just for, crypto people, that this is going to be abstracted away from the majority of users who are just going to be using financial services and not realize that it's DeFi on the back end.
Yeah, I definitely agree with that. And this is why I like this scenario that I just envisioned. Dominic, any thoughts, any comments and responses?
Sure. I mean, I don't have anything to add, because I think what's been said is quite good, except I think my hope is that not only will this revolutionize finance in the West, but for the larger world, because for whatever issues people in America might have with the debasement of currency, et cetera, overreach of government, obviously there are other people in the world who have a much larger problem and a lot less access to financial products, even basic savings products, basic banking. So I think there's a huge opportunity, outside of the West, in the developing world, to really provide people with even just the basics of finance. Which I think offers a lot of these, whether we're talking about, DeFi apps or the little pieces of Legos, I think a lot of their opportunity could potentially be offshore.
Mm-hmm. I agree. I mean, in fact, we have underserved communities also here in the US. We just don't, we're not really familiar with these pockets, but there are those pockets of underserved communities. So we can think about the US as well. I mean, not just overseas, but I agree. Michael.
Yeah, I mean, I think that there's a lot to unpack, and I think a lot of the things were already said. I tend to view DeFi as the future, right, of finance. And every time, we talk a lot with the banks, and we work with some of the biggest banks in the world. We educate them, and every time that they're asking me what we should be looking into, I'm just basically pointing them into some of the existing DeFi protocol, such as Compound and Aave and Uniswap, because fundamentally, it's already very clear how those functions or how DeFi, those protocols are basically replacing some of the basic functions in finance. Now, I have a more complicated view in terms of, I think, the openness and the long-term sort of extrapolation of this, because I think that given the sort of regulatory scrutiny, right, that the space is receiving as of late, and the fact that we do want a set of, I would say, legit participants that are bringing a lot of capital into DeFi, I think that there will actually be some kind of subdivision of DeFi on the short term, where we will actually see protocols that actually are somewhat limited in terms of the access, and are catering toward the KYC and capabilities that will allow people that are more regulated to participate in that. So I think that this will actually happen in the next 12 months. And honestly, the reason why I'm saying that is that because we are working on that with a few of the protocols. But that sort of it's actually sort of I view that as a sort of a stage through which we will start to have predicates like identity that is baked into DeFi and history that is baked into DeFi, because at the end of the day, although DeFi is open, and right now those protocols sort of assume not like only zero knowledge in general, but they also assume zero knowledge about the participant that is interacting with the protocol. It's clear that it basically undermines some of the benefits in the traditional financial system, where you can apply credit, where you can basically know the history of who you're dealing with. And I think that sort of naturally those layers will be added to the different protocols, and then I think we will see a lot of exciting things, right? Because on one hand, we will have the big financial institutions, or it's not like the fact that they're big or small, it's actually not the important thing. I think that the really interesting thing is that most of the assets in the world right now, or most of the capital in the world, is still locked within the four walls of those banks. And those assets need to be represented either in the form of digital securities or NFTs or stablecoin or CBDC or whatever, but they need to be brought up to the blockchain, and they need to be brought up by those people, because right now they're essentially sitting on those assets. So the first stage that we need to basically take care of is to enable those people to bring them into DeFi, and they can bring them into Ethereum, but most likely I think that they will bring them into blockchains that are generation 3, right, like Algorand and some of the comparable. This is what I'm hearing from them, right, that they're actually much more excited about not about Ethereum, but about the newer protocols. We will have the identity, and then slowly and gradually we will open it up. And then I think, to Peter's point, this is basically will unlock, it's sort of like open banking, but on steroids, that we will basically allow every person that with a great fintech idea to go and implement, and that person will not be limited through access, through regulatory licensing and things like that, and they will be able to have access to the rail and to the technology. That's my sort of 10-year vision.
Wonderful points, and I agree with them all. And you mentioned, 2 points that I was about, to that are very important that people are talking about. That is like a transition from CeFi to DeFi. And it's not that suddenly now everyone is going to be on a DeFi application. There has to be some kind of transition. So you already touched on that, and you mentioned how you perceive this transition going to happen. And I know that, we have to build compliance, has to be baked into the applications. I'm already working on some solutions, on-chain and off-chain, type of compliance. But, I want to, turn it, since Michael's already, touched on that, maybe turn to the other panelists and see what their view on this transition from CeFi to DeFi. How would that evolve? How do they see this transitioning happening? Maybe I'll start with Dominic, because you're working with those investors.
Yeah. So I think it can be painful, right? We talked a little bit about this before this call started. Right. Yeah. So a lot of what people are doing is running little experiments, which is great. I think that's where innovation comes from. You have to have the freedom to fail. But it raises the question, so who should be paying for these experiments? And I think largely there's a retail element that's paying for these experiments right now. And while I think it's great for this industry to be able to learn in this way, I am concerned about who's losing and what that means for, ultimately that's what regulators care about too, who's losing.
How much?
The people on this panel can lose, and that's fine, but there are people who can't lose, and if they lose a lot, it's not fine, and then the hammer comes down. So that's my concern is who's losing. From an investor standpoint, we approach this space the same way we do any kind of early stage technology. Who's the team? What's their domain expertise? How long have they worked together? All the kind of boring things that venture capitalists have been doing for years. And then tread carefully. And while I'm pretty sure investors on this panel are also doing the same thing, I think a lot of the money that's moving through the space is not doing that. So I have significant concerns that we're going to see the worst. Basically, this is akin to the worst parts of the ICO boom that we had previously, and we're seeing it repeated. And I'm concerned about who's losing.
A good point. Peter, do you have this same concern, or maybe you can answer the question? Maybe who's losing.
No, I think that's something that regulators are concerned with in DeFi for good reasons, and they're taking a close look at. I do think that regulation is probably the biggest threat to DeFi right now. I have confidence that it will be regulated in a smart way. I personally think that DeFi should be treated like cash, is that you regulate the on-ramps and off-ramps when you're going into and out of crypto. And what you do with your cash is not regulated. And what you do kind of within DeFi, I don't personally think should be regulated. But we will see what regulation actually happens within DeFi. It's a gray area right now. You talk about kind of how you make the evolution from CeFi to DeFi. And I think that is probably, there's a few things, but that is certainly one of the largest things that's holding at least institutions back. If you look at the lack of regulatory clarity around DeFi, it makes it difficult. At Jump, we are, I think, on the leading edge of a lot of things, and we're very careful about how we participate in DeFi, but we do participate in DeFi, and we are, I think, probably one of the larger institutional participants in this space. But it's not easy from a regulatory perspective, and you need to put a lot of time and thought into that. From a retail perspective, I think that the transition from CeFi to DeFi is really more about user experience, and how do you make the DeFi experience, just as good or better than a CeFi experience. And when we get to that point, that's when I think we see more mass adoption of DeFi from retail.
Okay. Steve, would you like to add to that?
Yeah, well, I think, Peter, your point is like perfect. I think, we'll know a victory has like been achieved here when nobody knows who Algorand is or Fireblocks or, any of these other tools. I mean, I think, today when you fire up Netflix, it's powered by AWS, but, it's not like there's powered by AWS there. It doesn't make it, nobody cares. So I think, the infrastructure just needs to work. I think I sort of agree that, probably the best outcome from a regulatory standpoint relative to DeFi is for the on-ramps and off-ramps to be regulated. It seems like a straightforward place. It's also already a place that is largely, for all intents and purposes, regulated, and KYC and AML obligations are respected. So I think that's at least plays an important part in it. I think in terms of the applications, I think what we're seeing is sort of what usually happens in a major tech movement, which is you have startups that are incredibly inventive and nimble and finding new uses for technology. And I think what's interesting in this case is that it represents also interesting financial opportunities for people participating in DeFi. On the flip side, I think Michael's point that all the world's capital materially is still in traditional institutions is certainly right as well. And I think the sort of what tends to happen with bigger institutions is the initial applications they try to recreate in new technology are the ones they already have. I think, the reality here is we don't need the exact same applications they have. I think this new technology gives rise to, more open opportunities and more participation from people around the world, but also just novel forms that haven't existed in finance yet. And so I think it's going to be really exciting to see what people do. At the same time, I think capital, at least from our perspective, is, generally interested in yield and interested in, people are interested in making more with their capital. And I think as these new applications gain in popularity and opportunities arise, we'll start to see more institutional players come in. At the same time, I don't think it's just the case that you have, all public DeFi apps or all CeFi apps or anything, things like that. I think you have places like structured products and other investment, styles in these institutions, and they need financial products that they can invest in where they understand the risk profile and they understand sort of what's backing it. And so I think what we will start to see is certainly a proliferation of more digital securities and more forms of financial products that can invest in. But we'll also start to see digital securities being used as collateral in DeFi apps and other things. And so I think certainly we're going to start to see a maturation. But I think what's exciting about the prospects of, I think in some ways, more stable regulatory regime and also of more digital securities on chain is that, we'll also start to see a way of maturation in terms of these applications and more people using them. So it'll be interesting to see how it fleshes out. But my kind of personal opinion here is that, the resting state tends to be sort of in the middle. It's not going to be all from one end or the other end. We'll just sort of have a new normal that emerges. But I think certainly the exciting part is that, definitely I think public blockchains and, sort of DeFi protocols on top of them and custody solutions like Fireblocks are all really taking hold. And I think, we're all sort of seeing quite a bit of momentum in the market, both around users and capital entering.
I have one comment on the regulatory, because I pushed the ball, but I did.
I wanted to leave regulatory for last. Okay. Yeah, but in fact, because Peter just mentioned regulators, immediately we get a question, and I don't want to have the entire discussion just on regulators, but just a second. Okay. But because I just want to at least talk about the. Before we jump into the regulators, which we will for sure, is to touch on a point that Steve just made, which is basically we're going to be like a transition. It's not going to be like from CeFi, which I'm going to jump to DeFi. It's not going to be like one time, kind of like event. And I think, people have to think about any technology, think about the internet today. we didn't like started with, with no brick and mortars and immediately everything is online. There was a transition. Today, we see more and more, most of our, whatever we do is online. Even, the cashless economy is in transition, and the pandemic has kind of like pushed us even further into that. So everything is going to move in some, it's going to take a space, but we're going to get there. We just, as people feel more comfortable with the technology, and then, eventually, as Steve was saying, we'll never even ask ourselves what exactly behind it. We're just going to use it like the way we use our internet. We don't even ask, what is the magic that is doing it, right? So that's how it's going to happen. And I hope that this is what I want to convey to people, that it's transition, and technology, the way I envision it, it always, technology, if it's good for us, it always wins one way or another. So it's just, a matter of, finding, the right way to get there. And yeah, now getting to the regulations, and I see, and there's always already a question. Maybe then I'll ask it and I'll let Michael, chime in first, because you already mentioned that. So I was about, to mention that, and even before we started our discussion, I saw this, that the chairman of the CFTC, the new chairman, had made a comment yesterday at the conference. He Googled DeFi, and from his understanding, the DeFi is a bad thing. And one of the things that he was talking about is basically, it says, that, we're not going to need any intermediaries, and et cetera. And then, and he was, talking to a bunch, an audience who are all intermediaries, so all financial institutions. And he said, you're not going to exist anymore, something like that. So someone is really asking these questions, about what you think about this idea of approved intermediaries, and whether, he's talking about the DeFis are illegal, and how can it become influential thinking about, legacy financial institutions versus, the new DeFi applications and all of that. How would that going to play out? So I, with that said, I let Michael, start with maybe to connect to this, or maybe something that.
I want to start with with actually a smaller idea, but I think that just to reflect on that comment, I mean, at the end of the day, the regulators are there to protect the small investors, right? They're not here to protect the institutions. They are not here to protect UBS. They are not here to protect Blackstone, right? They're not here to protect DTCC or CLS or SWIFT, right? They're here to protect the moms and pops and make sure that they don't lose their money like what happened in the ICO, right? That's, I think, their main objective. Now, at the end of the day, if that comment was made to protect the incumbents and to protect the financial institutions, I mean, this is essentially like the opposite of what the regulator should do. This is basically undermines competition, which I think, like, at least in the United States, that's like the main thing that Congress and the different parties are designed to do. And, we all know that even companies, when they're basically protecting incumbents, they're eventually being brought to Congress to testify on monopolies. So I don't think that there is a reason to deduct that DeFi is a bad thing. I actually think that eventually this intermediated most of, at least the backbone of the institutions, is positive. I do think that banks and fintech players and wallets like PayPal and those guys have place. What I actually wanted to say is something which is quite different, is that I think that a lot of their sophisticated regulation is coming in from FATF and from FinCEN, which is is trying to deal with is realistically trying to basically deal with the on-ramps and off-ramps around DeFi, and how do we really want to treat DeFi, is currently actually trying to apply traditional means which are not applicable to this technology. And I've seen it already in the past in different capacity in my previous life around cybersecurity. But effectively, what they're trying to do is to apply this KYC which is a way that which is the technology that works, or a concept that works great when you have a closed network, and when basically you have a network of participants like the traditional financial systems, where you can basically guard the on-ramps and the off-ramps. I think that actually, like, the problem right now and by the way, by no means I don't think that we should basically protect against terrorism. We should protect against child pornography. We should protect against ransomware. Those are real problems. Like, no one wants to be a party or part of an ecosystem that makes those things easier, right? But the way to deal with those problems, and this is just to reflect from my career in cybersecurity, is that in cybersecurity, we actually had a fairly large set of those problems going in and out without crypto for the last 3 decades. It's like ransomware and cyber attacks and extortion and those kind of things. And, you know, the ability to finance child pornography is not something that crypto enabled, right? It's not something that is the DeFi that doesn't exist without DeFi, right? And the way to actually treat it in the digital space is somewhat easier, because what we actually need is for those regulators to distribute the information about the malicious actors in a very efficient and fast way. And then players like Fireblocks and the DeFi protocols can consume that information in real time, and we can basically block and guard against those participants. And this is something that they are not thinking of. They don't want to step into this issue right now, but this is the real solution. The real solution is not to ask people for basically 10 identifications and take a photo of yourself with an ID and the date on a piece of paper, which is currently the process of KYCing to some of the exchanges. Because guess what? In every cyber attack that we've investigated, and we were able to gain control of what the cyber criminals had, they had hundreds of hundreds of IDs that they were using to impersonate, right? So this KYC doesn't work.
Okay. Dominic or Steve, would you like to say anything?
Sure. Or Dominic, if you want to, go ahead. Oh, he's on mute. I'll just go ahead. I was just going to say, I think that there's, certainly there's a need to protect people, especially retail users, and I don't think anybody disputes that. I think one of the complexities of these public networks, though, is that there's participants from all over the world, and I think, as Michael kind of laid out, like these are sort of non-trivial issues, and I also think beyond that, there's a fine line between stifling innovation or meeting regulatory obligations and stifling innovation. And I think, we're at sort of a complicated point as far as that goes. There's a lot of projects that are launching outside the US. And I think that, regulatory clarity in whatever form it takes, I think would definitely help drive more innovation, because right now, I think the lack of clarity makes it complicated for people. But I do think that's something for everyone to consider, is that, if you look at the internet, now it wasn't about people's money, so it was a little bit different, but that was largely unregulated and is still largely unregulated to this day. You could argue that perhaps, more regulation was probably needed in certain areas than none. But I think, I hope that wherever things land, it kind of gets to the right line where it acknowledges and encourages innovation while still, kind of meeting the primary objective, which is protecting end users here.
Thank you. Dominic?
Yeah, so I guess there's a few things to consider. One, in a perfect world, I think we'd like to be able to police ourselves as an industry. There are professionals here who I think are not trying to rip people off and would like to see people protected in some reasonable way. The problem is when you have the ability to get, VC-like returns in a semi-liquid product, greed takes over. And I think, you'd start to see people get overheated, and maybe some bad decision making happening. So this is what happens in other industries that are at least partially self-regulated. And so, while I think we'd all like to have a say in this, I don't think that's going to work. And which takes us to the next step, which is, I think, kind of what Steve was getting at, is whose rules? Like, imagine if we're two people on opposite sides of a transaction and my regulator says, oh, that's a token X kind of token, a utility kind of token. oh no, it's a security type of token, says a different regulator over here. Well, how's that treated? Like, can I, and let's say in other ways, if we were doing something that was not some sort of digital transaction, the rule set that we work with is pretty similar, but specifically because it's crypto, all of a sudden the rule set has to be different. So that raises concerns for how we build an industry and how people handle transactions. So I think the bottom line is, I think the regulators need to not be in a bubble, and as you said, not Googling, and need to talk to participants about what they see, how they see the ecosystem evolving, what they think the next 20 or 30 years looks like, and regulate with more of a futurist viewpoint, which, I mean, obviously that's not what government does, but that's kind of what we need here.
I like your point and the way that you connected that with what Steve was saying, which rules we will follow. And because digital asset is global. So do you believe that we might need some kind of, a global type of regulation, like a multilateral type of regulation rather than by jurisdiction, or maybe that could be built into the protocol itself, which I think that's also a possibility. And maybe Peter can, start with a discussion on that.
Yeah, I think it's, if the whole global regulations on crypto and DeFi was the same, it'd probably make things easier. I don't think that that's going to happen. I think some coordination would be great, but I don't think it's going to be equal everywhere, because I think that jurisdictions are going to see it as a competitive advantage to attract crypto companies and talent, and some are going to be more welcoming than others. That's, I think, the biggest risk from U.S. regulation is that already, as Steve mentioned, a lot of DeFi, projects and token sales, et cetera, are now happening outside the United States. And I think that poor regulation will just, will both stifle innovation, but it'll also largely push it outside of the United States. And that's what one of the things that I fear. What I hope we'll end up with is something that Michael was talking about when you think about DeFi, is that we end up with more of a blacklist approach than a whitelist approach. Is that, block the bad actors, keep them out, but don't have a kind of closed loop system. Because once you get to that, then you're killing a lot of the benefits that you wanted from DeFi to begin with. So I hope that they take more of the blacklist approach that Michael was laying out.
Good point. Steve, would you like to comment to what Peter or Michael has just mentioned on that front?
Well, I mean, I think certainly. I mean, I think Peter's take and others is right. I mean, if you look at winning technologies over time, it tends to be public networks, and I think public networks need to be open and need to allow anyone to connect. So the idea that you're going to only accept certain people into a public network, I just don't. I don't know. I can't. That's something that doesn't make any intuitive sense to me. And so I think what needs to happen is I think there certainly needs to be a maintenance. We need to maintain this idea that public networks can accept anyone, and I think by that means certainly blacklisting people that are known bad actors is important. I also think that there's this sort of some vague idea that somehow blockchains or public networks provide less visibility than a traditional system. I think it is true that you're trading trust in algorithms largely for what trust was in kind of a hierarchical system. But on the flip side, now you have the whole world participating, and I just don't think any sort of multilateral closed system. I mean, I can't even imagine what a mess that would be. I do think that, the fact that blockchains are transparent and there's a lot of public information going around is actually a benefit for governments everywhere if they learn how to use the data that's available to them and learn how to use their tools. And I think now they can have even more visibility into DeFi. All the transactions happening are public. All the wallets are public. Everything that's going on is in the public domain. And I think when you look at platforms like Chainalysis and others that are largely targeting the flows of money and looking for bad actors in there, and certainly there are many others that are doing the same. I think there's an opportunity for actually the reverse, which is by leveraging the public nature of these systems, now we can actually make the world a safer place, but also more open and productive. And so I think that's really the angle that people need to focus on in these new systems. I think certainly there's concerns whenever new technologies move quickly, but at the same time, I think everyone needs to look at the benefits that they can provide, and I think in this case, the fact that they are public and open means that there's a measure of safety that can come as a result of that.
Thank you very much. And a question just came in, which I was expecting that to happen, about the travel rule. How can we miss that when we're talking about crypto? So the travel rules, I'm sure that you're all familiar with that the FATF has just come up with, and now they have this idea, trying to encompass also individuals like developers, to be considered as VASP and other entities. So what are your thoughts on that? And Michael, would you like to start, because you kind of kicked off this discussion?
Yeah, so I think the general view right now is that the proposal is not really applicable, right? I mean, especially the part where they're classifying developers as VASPs. It's a fairly weird idea. It's almost like, I guess, classifying, AT&T or Microsoft as someone that develops any kind of weapon or something that is offensive, right? Because they provide they developed a platform that can do something. The way that people use it, that the people need to be regulated, right? So I again, this is, I think, goes back to my point that I think that right now the proposals that are out there, and especially and just to basically maybe specifically address that, my understanding is that the different associations in the United States, they're basically taking it to the this is a recommendation, right? FATF is a recommending body. They are not, and then in every jurisdiction, it's up to the specific regulator to decide if they're going to comply and adopt it. And I think that right now in the United States, and it seems to be that last I've heard, FinCEN is sort of in agreement that it went a bit too far. So we'll see where that ends. But I think agreement that we have between all of us, I think that this is definitely not the right direction, or not the approach. This approach is not in the right direction of where we think the regulation should go. Not to say that we don't need a regulation.
Yeah, fair point. Dominic, you said before, who's gonna be the loser? So, do you think that the travel rule is trying to protect the losers? Any thoughts on whatever?
I mean, I'll start with, I'm of a mind that I don't think we want to regulate devs in that way. I think that stifles innovation. It's bad for everyone. And anyone who puts those kinds of rules in place is definitely putting himself at the back of the line a decade from now, right? So we don't want to do that. I don't know that it really protects any of the people that I was talking about before. Not in the way I was talking about it. So no. So I don't think it's effective, right? So it stifles innovation, and I don't necessarily think it even protects the people that I'm worried about.
Okay, Peter, would you like to say your thoughts? You talked about regulators, so here you have an example for one.
Yeah, I think regulating developers in this way, I think is misguided, as Michael and Dominic said. Yeah, maybe I'll just leave it at that. I think that there is, the travel rule and the intent of it, more generally, and being able to prevent, money laundering and terrorist financing and those types of things, I think is is absolutely right. But the implementation of it needs to make sense. And some things like this, I think clearly don't make sense.
We're still so very hung up on this whole money laundering thing, which not that it's not a real industry, but if you're talking about protecting the little guy, it has nothing to do with money laundering, weapons, human trafficking. It's just not. So you can see that the focus isn't even in the right area, because people aren't actually focused on doing the right thing. I think this is really more about flexing muscles than it is about protecting investors.
I agree with points. Yes, sorry.
Regulators, right?
I know, but Steve, I think you work with the developers. So what do you think about that?
Well, I agree with what others have said here. I don't think it's the right approach. And I think that it's going to inhibit development. So I think certainly, I think there are better ways, to enable open and encourage, development of new applications without putting people at risk. But I do, agree 100% with Dominic that I think as constructed, it's really not protecting the people that at least nominally it's seeking to protect. And so that, I think there really should be some rethinking in terms of, what are the ways to really help protect retail users and people who are at risk in some of these different ways, and make sure that we're using tech to help with that. And, again, we have a lot of data, a lot of information at our disposal. And I think that, leveraging that to end up with good outcomes and setting rules that work with the technology, not as opposed to, things that work against it, are really important. I think if you look at GDPR in, Europe, that's a fiasco. And so what's sort of it's created, this is why we have to effectively click all this cookies nonsense every website you go to, because that's the lowest common denominator and no one really knows where users are coming from. So I realize it's not that simple exactly, but I think that there's a lot there where if you just look at rules that are constructed in ways that don't make sense relative to how users use networks and systems, you end up adding friction back in. And, I think especially in an emerging market, it's not, helpful, and probably not helping. It's neither helping innovation, nor is it helping the people that you're seeking to protect.
Okay, thank you so much. I definitely agree with your thoughts. Since we are kind of approaching the top of the hour, so I think I would like to maybe conclude with, we have about, 3-4 minutes to conclude, maybe with what do you think needs to happen in order for DeFi or the entire space, to become mainstream? Is it the killer app, clarity from regulators? We already talked about regulators. What are your thoughts? And let's start, now with Dominic.
Yeah. So, from my perspective, a lot of the people that I know that would be really interested in this stuff are still very much on the sidelines, right? They're not American. They're American. They're here, right? And so much of this is happening offshore, as Peter mentioned earlier. So, feeling comfortable as an American participating in these ecosystems, I think would be enormous. I think there are people here, who'd be very interested in, but as soon as I think people outside of our space, so they're either fringe actors or all the way out, as soon as they hear, oh, you need a VPN because you're really not supposed to be doing this from America, as soon as they hear that, they're going in the other direction. So I think that's stifling. So being able to get, a doctor in Michigan who wants to participate in these networks, getting him comfortable that he can do it and not have to worry about whether or not he's breaking some sort of law or there's not some extra steps he has to go through because he's American, I think would be enormous for the space.
Michael, any thoughts?
Yeah, I think actually it's more related to what my view is a bit related to what Peter and Steve said earlier, that I think it's sort of a very streamlined access. So I don't know if it's a killer app, but I think that the experience of basically on-ramping and using it and mostly also the education, because I think that people don't understand it. It's when I was trying to explain it to a few of my friends that they do have capital, they invest in things, it's just sort of sounds almost magical to people. How come you put something into dollars into compound and you're getting 6% interest? People don't understand, and you're sort of starting to explain to them how it all works. And it's very complicated. So I think that there should be a lot of education that is going downstream to explain people the technical risk or the lack of technical risk or counterparty risk in all of those applications. So I think it's the combination of how to make it both accessible and explain people what it does.
Peter?
Yeah, I think for it to go more mainstream, it's more ease of use, it's more education, like Michael said. And then frankly, it's just more time. Like, I think we need to remember just how new, like, so many of these things are. I mean, we're talking about many kind of protocols and networks that have been around, some of these for a year or two, or, a few months. So it's going to take some time for us to get adoption on these things. So I think part of it is just, we need time.
Yeah, Steve.
No, I was just gonna, just on my side, I think if you just take a step back, I think adding to what, Peter said, there's maybe 50,000 developers that build on blockchain today, and there's 19.9 million that don't, that build on web and mobile. And so I think, we're very, very early. I think these are fascinating new applications that we're seeing out in the space. But, agree with, I think, all the sentiment here that there needs to be better development tools. There needs to be better end user experiences. I think those will come as developers continue to innovate, and we see new things being built. So, and just from our side, for anyone who's interested in learning more about technology or building, please come to algorand.com, and we have a lot of papers and information and other things there that you can use to help learn as you start to look into things.
Thank you so much. I mean, we are at the top of the hour, and I'm sure we had so much more to talk about, but I thank all of these wonderful panelists that have been here today, Dominic Ward, Michael Shaulov, Peter Kokinos, how do you pronounce your last name? Sorry. Johnson, sorry. And Steve
Kokinos. Yeah.
Kokinos, sorry.
My name you were.
I'm so sorry. So thank you so much. I'm sure that you can find them, they have their own website, and learn more. So thank you so much, everyone, and have a wonderful day.